What's up, everybody? Michael Edward here, head trader at True Trading Group. March 16th, a new worst day in Dow history. Down 3,000 points today on the Dow. I feel like we have had our worst day in history a couple times now over these last couple weeks. I just made a video literally just a couple days ago about worst day in Dow history when we fell over 2,000 points, and now today we fall 3,000 points. I was really a spectator today, guys. I made one really small trade in the TVIX, nothing really to um, even worth discussing. But what we're going to go over in this video is levels. I'm going to talk to you guys about where I think this market is going, where I think it's heading. What am I doing in my long-term portfolios? What I expect to have happen, how long I think this is going to happen, and what is the market going to look like 3 months, 6 months, a year from now. That's what we're going to talk about in this video. Because like I said, I was a spectator today. We came into the markets today. We gapped down 10% today. Massive, massive gap down after the Fed yesterday did an emergency rate cut. We're looking at a 0% interest rate with $700 billion asset purchase program stimulus. It's quantitative easing, guys. That's what it is. It's QE here all over again. And markets did not care. And I have been saying, well, the equity markets did not care. That doesn't mean what they did was foolish. I actually cheer very loudly what the Fed did yesterday. And I think people that think the Fed that what they did was foolish and was dumb, I don't think they really have a good grasp on economics and really how economics works. I think what the Fed did yesterday was good. I think it alleviated the potential of a very serious financial problem. Basically, what we have here, guys, is a health concern or a health issue that's turning into an economic concern. That is what is happening with this coronavirus. We've been talking about it for the last couple of weeks, and what I think the Fed got ahead of what could be a very serious financial problem and economic problem, making sure that everything there's liquidity for people that need it, and that people have cheap access to capital, whether that's through loans or whatever it is. Now, what we're going to need now is some fiscal stimulus coming out of the U.S. government and Treasury. The Fed, in my opinion, is doing the right thing, and now we're waiting for the government to come out and announce a stimulus package. Democrats and Republicans are working together now to try to get something on paper, and hopefully they can do it sooner than later, because we need to have some type of idea of what economic stimulus program there will be for markets. But in the meantime, the equity market, the stock market keeps going down. And I've been saying this now for the last couple of weeks that the market does not care about economic stimulus right now because the market does not know how much economic stimulus is needed. I sound like a broken record. I've been saying it. That's why every single time we have had a news headline of some type of economic stimulus, the market has still gone down. And every time we've had some type of news headline that revolves around it's a health-oriented news headline, something with the virus, something with testing, something with the spread, something with a lockdown, social distancing, actions that municipalities and state governments are taking to help stop the spread. The markets have rallied. Now, it's normal to get these huge swings up and down during this environment, but that is what is going to move markets. It's going to be progress with the vaccine. Today, big day, okay? Really big day today. We've started on a vaccine for COVID-19. Day one of human clinical trials. 45, I believe it's 45 men and women are going to be taking part in that clinical trial. It will be fast tracked, and hopefully all things go well there, and we can get a vaccine out as quickly as possible. That type of stuff is what is going to help the markets. All right. But let's talk about levels. Before I get into levels, guys, and where I think the SPY is going to go, I have, in lieu of what is going on, this is such a chaotic time. I've never in my entire career seen the market gap down 10%. It didn't even do that in 2008 when we had the big stock market crash. But I am extending, and I've decided to kind of follow suit here, kind of with the Federal Reserve, and I'm keeping the 30% off for the True Trading Group services. I'm keeping that for the whole month. All right. I'm keeping it for the whole month. We were only doing it for a couple of days when the market was crashing a week ago. Um, but I've decided with what is going on, there are so many people that are fearful of what is going on. And there's such tremendous opportunity in the marketplace that I've decided to leave that for the entire month. So right now, you guys can get 30% off the 1 year all-inclusive membership package, the True Trading Group, to get you access to all of the trading courses um, until the end of the month. Okay, if you've watched my previous videos, I'm not going to keep getting into it. I don't want to sound like a broken record and a sales pitch to you guys. But I have a lot of people in the YouTube community and on Twitter that have asked me about this sale. People that have been waiting to join True Trading Group, and they feel like now more than ever they need to get an education and to be able to know what to do in a market like this. So I'm just letting you guys know that I have decided to extend it to the end of the month. So like I said, I'm not trying to be a sales pitch or a broken record, guys, but it's available to the end of the month. Click the link on the description below, and that'll get you 30% off, including the course that I just put out, which is how to survive and thrive during a market crash. It's basically I'm teaching you what I implemented in 2008 when I won Trader of the Year award. 2008 we had a big crash. That's when I won Trader of the Year. When I worked at the hedge fund, that course is teaching everything that I implemented during that crash to help you guys make money during this crash. Now let's talk about levels here on the SPY. Okay, obviously we are a stone throw away from 2018 lows when we were knocking on the door of a recession, when the Fed was raising interest rates quickly. Okay. We were knocking on the door of recession right there. This is right around 233, 234 on the SPY. That's a key level. A lot of people are looking at that level to hold. I think that level breaks. All right. Um, can we get a bounce off of this level? Yes, sure, we definitely can. But do I think that that bounce holds? No, I don't. I think that if we do bounce off this level, I do think in the coming weeks, months, I think that level gets broken. I do think that we start to go lower. But this is a major level, so you can start to try to plan trade ideas off of this level. So this huge sell, we are extremely oversold. I can't even begin to explain how technically oversold we are. But since the markets have absolutely no idea what the GDP impact is going to be from this coronavirus, that is why we have such massive moves. And the market's going to overshoot. The market is trying to price in that recession. It's going to overshoot it, and there will be tremendous opportunities. I'm going to talk to you about what I'm adding to my long-term portfolios and how I'm going about doing that. So today is going to be a little bit less of an active trading lesson, because, like I said, I was a spectator today. I didn't have confidence in direction in the overall markets one way or the other. But I'll talk to you about intraday trading in a moment. But let's talk about levels. So like I said, first level here is 2008 low. Maybe we get a bounce off that level, but eventually I think it gets broken. And as we pan this out, the level that I'm really starting to look at now, guys, is 2015, 2016 highs, which is around like 210 to 213. And you can see all of this prior resistance back here from 2015 and 2016. That's the level that I'm really starting to eye up right now. I have started kind of dipping my toes in the water with my long-term stuff. Last week I added to a lot of my tech holdings. The tech companies are the ones I want to go after first. They're holding up the best out of the companies that I'm really overweight in my long-term portfolio. Just to give you guys a couple of tickers, a couple of stocks that I added to last week: Apple, Amazon, Microsoft, Facebook, Google, AMD, MU, Nvidia, NVDA, Disney, Qualcomm. All right. Those are companies that I added to last week in my long-term portfolio. My next target of companies I'm looking to add include JP Morgan, Home Depot, Johnson & Johnson, Boeing. Okay. That's the next grouping of stocks that I'm going to be looking to for my long-term portfolio. And then I also will be looking to get TNDM. Okay, TNDM diabetes company. Okay, so this is just, I'll update you guys as I go. Now TNDM, I do not have a position in. I have positions in all the other stocks that I named. I'm going to be adding to those. TNDM, I do not have a position in. I'm looking to open a position in TNDM. Okay, so I've been trying to buy TNDM actually for a while, and the stock just has run away from me every time that I've thought about buying it. It's kind of gotten away from me. But now back here below 50, I love TNDM down in this area. Anything in front of $30, I'm definitely a long-term buyer on TNDM. So we'll go back to the SPY, and what I'm going to be looking for here now, guys, is I think I'm going to play this 2018 low as a tradable low, and I think that we can see, one of those 1,000-point, 1,500-point bounce back days in the market. You're seeing leverage come out of the market right now. This sell-off, you're seeing leverage come out of the market. You're seeing margin calls. You're seeing all of that highly leveraged stuff come out of the markets. And that's why we're overshooting kind of all of these support levels. But I think we get a little bit of a bounce here. But eventually, guys, I do think, I'm not trying to be the bearer of bad news here, but I do think that we get down to these 2015, 2016 previous highs. And then I think that is where valuations will get cheap enough. And what I think will start to happen is you will start to get people come in and buy specific stocks once we get down to this level. That will start to slow down the selling pressure. The selling pressure also may just kind of exhaust itself. Value buyers will start to step in, but we are not going to see a sharp recovery in the markets until we get some real headway on the virus, until the virus gets contained, until we see. Right now, the spread of the virus, the curve is going like this. Okay, once the curve in the U.S. goes like this, that's when you'll start to see the market start to bottom, and we'll start to see what type of a recovery, what it's going to look like. I think it's going to be a long recovery. A lot of people are talking about, oh, we're going to snap right back. I don't think so. I don't think so. I think it's going to take several quarters before we see the economy really, really get going again. I don't think we're going to V bottom. I think we're going to kind of U-shaped bottom, and I think it will take a little bit of time. But eventually, if you guys, a year from now, yes, a year from now, I believe that we are definitely higher than where we are now. So when I talk about adding to my long-term stuff, I'm not going all in at once. I'm just, taking little bites as we go lower and lower. I'm not trying to pick the bottom, but as we get down to these levels, I'm taking a bite out of some really good quality names that I know aren't going anywhere. None of the stocks that I mentioned to you are in danger of going out of business. I would say stay away from cash-strapped companies when you do look to add to some long-term stuff. Don't think just because a stock is down so much that it's a good long-term buy, because you will have some companies go out of business. Companies that do not have the cash to withstand this type of economic slowdown could be in some serious trouble. Okay, so do not just think, oh my God, this stock is down 80%. Let me off of its highs. Let me buy that one. No, I would much rather buy Apple, a stock that's not very far off of their previous all-time highs, rather than buy a company like Macys. You look at Macys. Macys is back at 2009 levels. Take you guys to a weekly chart, okay? And I draw a line across a 2009 low. There it is. Actually, the low is 2008. That is where we are. Macys went from $6 to 73, back to 6. All right, that's not something that I am jumping to add to my long-term portfolio. Okay, a stock that is right where it was during the great crash of 2008, because I do not believe this is 2008. I do not believe it's as bad as 2008. Could we continue to trade lower on the SPY? Absolutely. We're down 30% from our recent highs. Could we be down 40%? Absolutely. Could we be down 50%? Absolutely. That's why I am not rushing in. But what I do think is, I do think people need to stop panicking. I tweeted something today that just got crazy action on Twitter. Got like hundreds of likes and like, I don't even know, 50 retweets or something, which is a lot for me. I don't have that, I'm not really that. You guys want to follow me on Twitter? It's Mike Edward underscore TTG. But I said something on Twitter today that said, well, here, I'll just read it to you guys actually verbatim. It's pretty. Oh, here we go. Okay, I said, stop panicking. Smart people are buying stocks. Dumb people are buying toilet paper. Create a shopping list of companies you loved a few months ago. This too shall pass, and what's left will be opportunity. Stay away from cash-strapped companies and think long term. And that is the way that I'm approaching this market. It's what I'm telling all of our TGG members. I'm telling my friends, my family, um, be smart about this. There's no need for you to rush into the market, but I think you need to start formulating a list of stocks that you really, really like for the long term. And as the dust starts to settle, you can start to average yourself into those positions. I think when all is said and done, this is going to be a once in a generation opportunity. So I always wish that I was in the financial situation and I had the money that I have today. I wish I had that in 2008, because if I had the money I have now back in 2008 with what I know, I would have been able to capitalize on that 2008 2009 crash a lot better than even what I did. I still made money during that crash. I still invested after that crash, but obviously not as much money as I have now at this point in my life. So I think this is going to be a once in a generation buying opportunity to get some really high quality names at a 40%, maybe even a 50% discount from their recent highs. And I think that's an absolute steal. So I think if you're smart about this, if you don't panic and you start to actually do some homework, take all of my courses, learn how to survive and thrive during a stock market crash, take advantage of the 30% discount, because this is opportunity that I don't think that doesn't come around every year. It doesn't come around every 10 years. This is the best buying opportunity that I have seen since 2008. And if you guys need to go back to 2008, I'll go back to 2008, and there it is. And you can see what the market has done since 2008. Well, this is the best buying opportunity since 2008. Okay. What I'm looking at here, guys, if here's the weekly chart of the SPY, and you want to put things into perspective, okay, there was the dot-com bubble. Okay. This was the internet boom, the dot-com bubble, boom. Okay. Recession. Then you had the housing crisis, boom, recession. Then you had this massive bull market. And then now you have, boom, coronavirus recession. Okay. So I think this massive pullback, which we could get down even into this region, and that I think will give us a buying opportunity of our generation, and it will be a real wealth building opportunity for people long term. I will say that I don't care how low this market goes. There is no one that's going to convince me otherwise that when the dust settles and there's a vaccine for this virus and the virus is contained, there's not a single person on this planet that's going to convince me that that will not have been one of the greatest buying opportunities of my generation. So if you want to fight me on it, comment below. Let me know what you think. I love to debate. I want to hear what you guys think. What are the levels you're watching on the SPY? How low do you think we're going? What kind of type of recovery do you think we're going to be looking at? But I think that when the dust settles, I've got cash on the sidelines that I'm waiting to deploy. And I will have some dry powder to execute when there's blood in the streets and everybody is panicking and the sky is falling. I will be strategically picking out names that I like, and those are a few names that I shared with you earlier in this video. I hope this helps. I hope this puts things into perspective for you. If you are, if you're a young person or you're not really getting ready to retire or anything like that, this will be a tremendous opportunity for you. So be smart about it. Don't panic. Forget about the toilet paper. Start coming up with a true shopping list that can make you money instead of just take up space in your closet. Remember, guys, click on the link below to take advantage of the 30% discount. Use coupon code TTGBM2020. And tomorrow's TG Tuesday. The chat room's open free for everybody. So make sure to go to TrueTradingGroup.com, click on the upper right-hand corner where it says TGG Tuesday, fill out that form, register, and you'll get access to my chat room for free tomorrow. Trade the markets with me because we're moving 2,000 points in a single day. There's opportunity everywhere. I'll see you guys in chat tomorrow. Later.